As expected, Russia has halted gas exports to Poland and Bulgaria over the country's refusal to pay for supplies in rubles. Moscow announced that Russian gas supplies to Poland and Bulgaria would be suspended starting April 27 due to their refusal to pay in rubles. Russian energy giant Gazprom said it had not received payments for the April deliveries. Notably, the European Union is still considering options to cut imports of Russian oil as a part of possible further sanctions against the Kremlin, while the US and Britain have already announced a restriction on imported Russian oil. However, the situation in the European Union is still uncertain. The authorities are still debating whether to boycott imports of Russian energy. For instance, Germany and Austria signaled the agreement to new payment terms. However, Poland and Bulgaria went the other way. The situation in Europe helped ease negative investor sentiment caused by the worsening epidemiological situation and the new possible lockdowns in China. The local authorities shifted their focus from Shanghai to Beijing amid rising cases in the capital, which sparked jitters about its unprecedented lockdown and fuel demand. Now let's take a look at the trading chart of Brent crude oil. A rebound from the level of $100 per barrel helped the quote return above the 105 mark. However, the prevailing mood in the market remained bearish. Based on the price fluctuation over the last 2 months, the market demonstrates an amplitude pattern whose amplitude cycles are gradually becoming low. This indicates uncertainty among market participants, which may lead to their close attention to the current situation. Speaking of trading signals, short positions will be relevant if the price fixes below the $96 mark, at least on the 4-hour chart. And this move will lead to a completed amplitude cycle and a continued downtrend. As for long positions, there are no clear buy signals, as the contraction phase has not yet come to an end. The situation in China also affected the dynamics of the gold quotes. The precious metal suffered steep losses amid a stronger US dollar supported by expectations of an interest rate hike by the Fed. After touching the variable pivot point of $1,890, the movement of gold futures slowed down, and this led to a local reduction in the volume of short positions, but market sentiment remained bearish. If the price fixes below the 1,875 mark on the 4-hour chart, the downtrend will continue. Otherwise, the metal may start trading sideways around the current levels. As for the dollar-ruble pair, the volume of short positions once again decreased in the range of 71 and 72 rubles per dollar, which resulted in a slight pullback. In order to gain further downside momentum, the price needs to settle below the important psychological area of 70 and 71. Given fundamental factors, the Russian currency has every chance of extending gains. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.